question may arise that okay, they are highly traded, but we are going to give as you trade in India, what we are going to do is we are going to stream the price data as it happens on Globex to your trading terminal. Because Globex is trading round the clock, as trades take place on Globex at CME or wherever, we will streamline that data to your trading terminal. The question may arise that what kind of trading volume will I see during India time? So these are the figures. We propose to trade this contract from 9 to 5 India time, and during India time, if you compare the volumes, these are the volumes. 1.44 lakh contracts as compared to 4.81 lakh contracts of Nifty. To put it in a different manner, in a time period where you get 4 Nifty tickers, you will get 1 ticker for E-mini, if you look at it that way. So you have enough traction. It's not that during India time you may think that there may not be enough traction. There is enough traction. The volumes are comparable with Nifty. On your left hand side, during India time, what kind of volatility is seen? Okay, there is volume, but what kind of movement? Someone may ask. Is there movement? You can see the data. We have taken 2 sample contracts for E-mini and E-mini S&P 500 and E-mini Dow Jones. Plus we have taken a sample contract for Nifty futures. And we have compared their maximum and average high-low prices during 9 to 5 India time. You can see the percentages. While for Nifty you see a high-low percentage of 2, it's 1.67, 1.43 for the near month contract. In case of CME it would be the near quarter. So even the intraday price movement during India time is quite good. This is the contract specification for these 2 contracts which we have proposed. It has been designed after talking to many members, after taking their views, after studying what they would need. The lot size for S&P 250, for DJIA 25, and the tick size is 0.25 in case of S&P and 2.5 for Dow Jones. The tick value for both will be the same, and the contract value for both will be also quite identical, around 3 lakh. The tick size will cover all your costs including STT, and yes, STT will be applicable on this product. So we have kept a tick size which will at least cover your trading cost as well as leave some profit for a round trip. So tick size is large enough. We will introduce contracts up to 12 months. As I told you, for futures we are planning quarterly contracts in line with what CME offers. I'll talk about options later where they have monthly contracts. We'll take that later. Trading time would be 9 to 5. The expiry would be the 3rd Friday of the month as in the case of CME. And the settlement price will be the SOQ used by CME. So their settlement price and our settlement price will be the same, so that people who have access to both the markets, they can get into various strategies. They can take offsetting positions in both the countries. They can take advantage of arbitrage.
Yes. I have a question here. You said access to both the markets. Can you just elaborate on that?
See, you may have relations in US or any other country where you have access to the Globex trading platform. And as a member in NSE, you will have access over here.
No, but I am not allowed to take positions there, right?
Your associates.
Are you hinting at something which we are trying to get? Because FIs are not allowed, NRIs are not allowed, here only Indians are allowed,
Right.
their associates are allowed. So are you trying to hint at something?
No, it's very clear. See, here FIs are not allowed. NRIs are not allowed. You as a member can trade here. If you have your associates who can trade on Globex in US or any other country, you can take offsetting positions in both countries. Any other questions? Yes.
How will you derive the price?
Which price?
The
The price will be the index. The index number.
11,000 future right now. What is the price over here?
Same.
Same.
It is the same number. It is the index number that you are trading. There is no conversion involved.
No conversion.
No conversion. I told you there is no conversion, no relation to currency rates at any point of time anywhere. Trading, clearing, settlement, risk management, nowhere. You have a number. Today as you trade Nifty, Nifty is a number. So these indices are also a number.
Now the settlement price, if that is being manipulated, then what will be the impact?
Manipulation would be very difficult because you are taking the opening price of each constituent and that too after the trading has ceased. Trading will cease on CME at 8 AM Friday morning, US time.
Similar opening price quotation, similarly, you know what happens and what 9:15 it starts.
No sir, see on Friday, third Friday, 8:30 AM US time, CME stops trading these contracts. 8:30 AM their market opens, the underlying market, and then each stock is traded. As each stock is traded, its first traded price is taken whenever it opens.
So it is very easy to manipulate opening prices over here. If not easy, it is possible. So is it possible to manipulate opening price over there also?
I don't think so. US market is one of the most developed markets, one of the most liquid markets.
So basically you mean to say my contract will expire one day earlier, I mean one evening earlier. At 5 o'clock.
Thursday we will expire.
No, we will expire it on Friday evening because we are 12 hours.
Right? It's 9 o'clock when they start trading there, and we start at 5. So then how do you match that difference?
See, you will stop trading here at 5 on Friday evening,
Yeah.
right? And they would have stopped earlier, but they would stop at 7:30 India time,
India time, yeah.
right? And then after that the SOQ is computed,
So there's a 2-3 hour gap
right?
between the closing of our market and the opening or the calculation of the
Right,
index.
right.
So that is according to what they trade on the crude and all that, on the commodities. That is the close.
I am not getting your point because see, we are also not trading, they are also not trading when the SOQ is being computed. So we are not at a disadvantage.
No, let's assume on Friday at 5 o'clock I am into the market, I am trading. So the market is going on there.
Yes.
At 5 o'clock we shut. What happens to their market? It is trading.
Yeah, it is trading.
Yeah. So that they have that opportunity towards the end of the last couple of hours to close out their position at whatever price they can. Whereas we will not have that advantage. We will straight from 5 to 7:30. Whatever is the difference, that is the difference in the closing that will be.
No, that is not going to affect your price. That is not going to affect your price because the settlement price will be computed based on the underlying market's opening prices, which will open only at 7:30 PM India time.
But our position will open not till 5 to 7:30, it is just open.
It is open for them too.
For them.
It is open for them too. So we are not at a disadvantage. That is the point I am
By
trying to make.
gauging the outstanding position over here, the opening price can be manipulated there.
It's too small.
See, The market is too developed, the market is too big over there. It is very hard to believe that you can manipulate 500 stocks of S&P 500.
So it means opening price of the Dow Jones Friday morning is the closing price.
Closing price. The settlement price rather, not the closing price.
SOP of the
SOP. See, the basic point is that traders in India will not have a disadvantageous position as compared to traders over there, because when they stop trading, the SOQ has not been computed. So even they are not trading when the SOQ is getting computed. They have stopped trading.
Okay, so you have to adjust this 5 o'clock to their standard timing. In the sense when they have winter hours and
Yeah, that 1 hour difference will be there.
and
I am
they-
taking 7:30 as an average, but one hour difference will be there.
They stop trading in future at 8 AM in the Friday morning. They don't trade after that in the future
No.
contract. We will trade up to 5 on that future contract.
Yes.
That is it.
No, our 5 is there almost 2 hours difference.
2 hours difference.
We will trade up to 5, they are trading up to 8 AM in the morning.
7:30.
7:30. Yes.
Indian time if you count, they will be trading up to 7:30.
In the evening.
In the year.
You stop at 5 o'clock, they will trade up to 7 o'clock.
7 o'clock. 7,
7
7:30
o'clock.
depending on
7:30,
daylight saving
half an
time.
hour is closed. And
Any
you
other
always
question?
have opportunity to roll over to the next series also.
Yes.
So you don't have to keep outstanding position if you don't wish to keep. You can roll it over.
Risk management, very similar to Nifty contracts. No changes. You have initial and exposure margins. Various margins which are prescribed for indices will be applicable. So it will come to around 10.1% minimum. Since it is traded in F&O, no new collaterals will be adjusted from F&O collaterals itself. Position limits, again similar to indices, rupees 500 crores or 15% of OI for trading members and mutual funds. For clients, there is a disclosure. Something unique which we bring with this product is a cross margin benefit, which is across products. If you take offsetting positions in S&P 500 and Dow Jones futures in a ratio of 5:6, that is 5 contracts of S&P 500 and 6 contracts of Dow Jones, you can get a spread advantage, a cross margin advantage of up to 75%. Now in this example, I have taken this example on the basis of 5 contracts and 6 contracts, as the ratio will apply. Your normal margin total without offset would come to around 3 lakhs. But if you take the 75% benefit, it will come to around 80,000 rupees. So which is a huge saving. And this is possible because of their very close correlation.
But whatever cross margin between Nifty and S&P.
So you saw the
So you don't give it
you
to
saw the correlation is too low. For remaining positions which do not fulfill this criteria of 5:6, normal margins will be applicable. But this will be a big advantage for those who would like to do pair trading between these two indices. Applications, you are the traders, I don't need to take you through what are the applications: directional trading, hedging, arbitrage, etc. A few points which I would like to touch upon. View-based trading, positive indications from the US economy, obviously you buy the index, negative indications, you sell the index. Pair trading, I'm sure many of you are involved in pair trading or by whatever name you call it. Pair trading in these two indices is very popular. As you know, in US, automated trading volumes are very high, contribution of automated trading is very high, and these two indices, because of their high correlation, become an ideal pair. Pair trading is market neutral, we all know that. It's a mean reversion strategy. You get into a trade wherever you see or you feel based on your analysis, past data, that the ratio of these indices are diverging from its mean or known behavior. You take positions, and when the mean again comes back, you reverse positions. It's a very simple strategy. The only thing is, how will you calculate the ratio? So the ratio is actually the value of S&P divided by the value, contract value of Dow Jones, which will give you a number. We have an example over here. April 14th, you have S&P index figure 1210.65 and Dow Jones 11123.11. Your observation is that the spread, the ratio has widened to 1.09, while your observation or your expectation is that it should be around 1.07. So you short S&P 500 and you take a long position in Dow Jones. I have taken just one contract over here. This was the spread ratio. This was the spread ratio when you took this position. I have taken a margin of 10% without giving you the advantage of spread benefit or cross product benefit, around 60,000. The mean reverts to 1.07. You reverse your positions. This is the profit that you make, and if you compute your returns, it will come to around 11%, and this is without the cross margin benefit. Cross margin benefit is 75%. So in fact, this figure will come down to around 15,000.
Considering STT, stamp duty, whatever you pay, I think the spread, I don't think there will be much spread.
There will not be much spread.
Yeah.